Exchanges are the backbone of the financial markets. Exchanges have evolved from a humble meeting of 24 stockbrokers under a buttonwood tree in 1792 to complex tech-centric entities trading on all manner of securities, derivatives, and digital assets. In this session, we will meet two new entrants who are poised to lead exchanges and exchange technology into the 21st century. I'd like to invite out now our moderator, Michael Bucella, General Partner of BlockTower, and our panelists, Dmitri Galinov, Founder and CEO of 24 Exchange, and Vishal Gupta, Head of Exchange at Coinbase.
Okay, great. Thanks for sticking around, everybody. We're going to try and keep this tight and leave some time for Q&A on the back end. So I think first it might be helpful just for introductions. I'm Mike Bucella. I'm one of the partners at BlockTower Capital. You just saw my partner, our CIO, speak earlier, Ari Paul. We run a handful of investment strategies across hedge funds, VC, and crypto. Dmitri?
I'm Dmitri Galinov. I'm CEO and founder of 24 Exchange. We are a multi-asset institutional trading platform.
I'm Vishal Gupta. I'm head of exchange at Coinbase. It's a spot exchange that trades crypto.
There we go. So we've got, the idea here is our exchanges, market infrastructure, kind of where we're going, where we were, with two kind of, I would say, pretty differentiated platforms here. So I think we'll start with Dmitri. So you come from a long career on the exchange and market infrastructure side. What was the impetus behind 24 Exchange?
Absolutely. So I had a very long career on Wall Street in electronic trading. I traded about 17 years electronically, equities for Credit Suisse, JP Morgan. I did lava trading and a bunch of other things. Then I went into foreign exchange. I created a company called FastMatch, sold to Euronext. And then I created 24 Exchange. 24 Exchange impetus was for us to create a low-cost electronic system for all of our users to exchange assets electronically, multiple assets over a single system. So if the problem, what I saw with all the exchanges, like you take exchange like CBOE, you have to connect to CBOE, trade options, then you have to connect to BATS, trade equities, then you have to connect to Hotspot, trade FX. So let's say if you're a bank or you're a hedge fund, you're a trader, you have to maintain separate agreements, separate infrastructure, separate compliance people. So it all adds up a lot of costs, and that ultimately, the buy side is paying for it. So we said, look, we have a fixed protocol, which is a uniform protocol, whether you trade FX or equities or options, is the same message, is the same kind of content. The difference is about 1%, which symbol it is. So I like, well, why don't we create one system that trades everything 24/7, 365? And so that's kind of how 24 Exchange was born. So where you can connect to one terminal and trade everything. It's like very similar, like if you have Bloomberg, you see everything in Bloomberg. Very similar with our exchange. You just have one connection and you get all asset classes.
Very good. So Vishal, clearly Coinbase, maybe a few of you have heard of it, small platform across crypto. The hub of it is an exchange business. You spent a lot of time in the traditional world as well. I think we overlapped for a few years at Goldman before you were earlier in the disruptor model than I was, and ended up at Coinbase in the last year, I believe. So what about Coinbase excited you? And I think specifically, what excited you about leading the exchange business at Coinbase?
Yeah, that's a good question. We did cross paths at Goldman. That's really where I started my career. Spun up a couple electronic trading businesses, highly focused in the listed options world. And coming from that traditional world, I think we looked at what was happening in terms of innovation. We were always talking about speed. And at some point, after 10 years of doing that at Goldman and another couple years at a couple other firms afterwards, realized that speed was no longer innovation. After taking a look at crypto, and I've always kind of been in the space on my own, working on projects on my own time, realized that it really was the career for me. Almost 6 years back, started building some products in the space. Ended up getting scooped up by Circle to launch and lead the growth of USDC. So that was really kind of the foundation to my crypto experience. And I looked at it as a way of having real impact in not only finance, but the greater crypto economy, I believed could be much more than just a finance play. And looking at what USDC had to offer, I thought it was a great way to kind of really put my fingerprint on the crypto economy. I consider that a pretty successful project. Had a lot of impact on not only the centralized exchange world, but also the decentralized exchange world. Really kind of seeing the first, the gateway into DeFi allowed me to say, let's do something else that we can, that I can have more and more impact on. And looking at what Coinbase's platform had to offer, I thought I could really come in and make some sweeping changes. When I joined a year and a half, almost 2 years ago, there was 25 assets on the platform, and now we're close to 160 assets on the platform. Our market share has grown substantially, and our focus has been to allow for our clients to have everything they need within our platform on the exchange with deep amounts of liquidity. If you look at some of the institutional buys in the last year or so, that was done through Coinbase's Prime business, largely leveraging the deep order books of Coinbase Exchange, and that's some of the work that the team has been working on since I joined.
Got it. And I appreciate the dramatic lighting change as that
very
response
dramatic.
occurred. So I guess what I want to do is break this down between client and product. I guess we'll stick with you, Vishal. So how has the client landscape changed? What are the demands of a newer, I assume, more institutional client base that you're getting? And by the way, we have an announcement from both Coinbase and 24 Exchange today, so a little bit of an alpha drop here happening. You could it probably parlays well into this question anyway.
Yeah, no, definitely. And crypto is very similar to the listed options world, where it really started in the retail sector, and people wanted it. They wanted to trade it. There wasn't some deep pool of liquidity that they could trust. And I think that's the analogy that I can see. And the institutions came after. Everyone from large-scale market makers to family offices to people that just wanted to buy and hold didn't understand custody, didn't understand any of these pieces, and a lot of the work that Coinbase has done building out their Prime business was to allow for a white glove service for institutions to really come in, get the liquidity that they need, get the custody they need, get the leverage that they need for their businesses. And as you mentioned, we're announcing a product here today, which is BTC auction. So we're going to do a scheduled BTC cross for both institutions and retail to come in and offer one single price that they can cross at. And it's really important for those who want to have periodic buys of Bitcoin to have a defensible price to say, hey, this is what I bought the Bitcoin at. And this is just the very beginning of this process. Throughout the years that I've seen crypto exchanges, and I had some work done. I had done some work on Poloniex as well. We see on the institutional side systematic traders coming to crypto first before any product class because the lower barriers of entry. You don't have to be a regulated market maker with some obligations that you have to show up and do certain things. Everybody's on a level playing field, and if you look at traditional markets, you have on-premise microwave towers trying to get as quick and as close to the exchange as you can, whereas crypto is in the cloud and everybody is treated very similarly. So I think that you'll continue to see more and more systematic and opportunistic traders come into crypto first, and I think crypto will only get larger as we go.
Got it. And similarly on your end, so who are the power users behind 24 Exchange? So these are probably slightly different clients than you would see on Coinbase, or maybe very similar. Who are the folks that are using your platform most heavily? Who do you think you're building for?
Yeah, so our client base is a little bit different from Coinbase. Our client base mainly are very large global banks. Your JP Morgans, your Goldman Sachs, UBS, Standard Chartered. So we started 24 Exchange, started our system with foreign exchange, which has very big participation of big banks and hedge funds and proprietary trading firms. Essentially, what's interesting about those, and we had a product announcement today where we did the first trade of NZF, crypto NZF, and that's the product that those banks that already trading FX with us will be using. And the reason is because our clients, they can't touch the actual crypto. There is a lot of still AML issues, sanctions, compliance and regulation and so forth. So for that reason, none of the banks really, they can't trade it or very large institutions. So what we did, we created a derivative where essentially NZF is a non-deliverable forward, and you can have exposure. And this is how, by the way, a lot of emerging market currencies trade. Like, for example, if you want to trade Brazil, Korea, or even Russian ruble now, obviously there's no derivative now. Everybody trades NZF because they can't get ruble. So when the big banks cannot touch something, that's what NZF's been developed for. And so what we did, we pioneered the NZF product. We created specification along with our investors, which is JP Morgan, Standard Chartered Bank. We have Steve Cohen invested from Point72. So we worked and created the contract, NZF contract, and we started trading contracts. So this contract is very good for the big banks because they're very familiar with it. They already have it programmed in their system like any other currency. So we think this is going to create a huge boost of participation of this institution into physical markets. So because this NZF contract is a bridge. And so in terms of the product, Coinbase, in a lot of crypto exchanges, they came from the retail world and they moving kind of more institutional. We go the opposite. So what we did, we kind of were later to the game. They created their exchange before us. So what we're doing is we creating a big institutional market, and this is what we do, and then we will open it to retail. So we're just going the opposite direction from what this guy's been doing.
Got it. And I don't know if the light off means that we didn't, it's like late night at the Apollo and the guy with the cane's gonna come and pull us off, but I think we're still good to go. We have 16 minutes and 20 seconds according to the wind down. Let's talk a bit about, so we have kind of given an overview of product, but as we think about, I think about Coinbase when we launched our organization, it was one of a handful of emerging exchanges. Coinbase was probably the leader then as well. And then Coinbase Pro and a few other things, many things that have evolved since then. How does product development come along? So in the auction, for example, were there clients that were demanding this? Were these some of your largest clients? Was this from an institutional client base that you were trying to appeal to? So what keeps the R&D engine humming, and how do you guys product develop?
Yeah, I think Coinbase is a unique organization in the fact that it's a DRI organization that's product led. So by DRI, directly responsible individual. So when I say I'm head of exchange, like I'm the guy that deals with pricing, asset addition, all the things that involve the exchange itself. I am on the product side, so I am a product manager myself. All right, done.
Oh boy, that's it.
We're done, I guess. I think it's a wrap now. I'm going to assume we're still going.
This is the anonymous culture of cryptocurrency.
This is a dark pool.
We're going to
dark pool.
We're going to muffle your voice.
I love dark pools.
So as a
There we go.
thank you, appreciate that.
They're still here.
Yeah. So as the DRI culture allows us to, there we go. All right. The DRI culture allows us to really manage our own silos, allows us to make decisions on our own. We get to invest in R&D in certain areas where we believe that there's going to be expansion. So the things that I'm most excited about are the things that no one can see yet.
Yeah.
And it really is. I feel like I'm sure every Apple engineer, when they're launching the next iPhone, and people are looking at iPhone, 10, and you're working on 15.
Or an iPod.
Exactly. Yeah. You're already, I'm already thinking about the next thing, and I'm very excited about the amount of R&D that we're doing. I can tell you that we're growing substantially and very quickly. Doubling at a pace that I've never seen any company grow at. I mean, my own hiring's been incredibly fast on our team. I think quadrupling since I joined my team. So we're going very fast, and I'm excited about the things we have in the wings.
Yeah, it makes sense. An exchange is a liquidity hub for all of the products. So even as you think about the future of NFTs and security tokens and the like, I think that's, the exchange portion of that liquidity is sort of everything in markets. So that's interesting. And then on your end, so what was it that Stevie Cohen saw that he said, this is something that is appealing to me and my fund, and I'm sure other investors in this universe? How did your product evolve from, idea phase to implementation to the NDFs today, and kind of what are you thinking about in the forward?
Absolutely. So the main product is crypto NDF that got Steve Cohen, Mark Yusko is another investor, and us is excited. And this is the bridge for institutions that we created to go and access physical liquidity. And the way we created it, we came to our investors. We came to JP, to Standard Chartered, to Goldman's of the world, and said, look, do you guys want to trade crypto? And they're like, no, go to our compliance, talk to our compliance guy. There's no way we can touch that thing. And
that is changing.
Hopefully,
I'll
we'll
tell you the
see.
truth. Spot trading is, a lot of names that you've mentioned, they're still talking to regular spot
Excellent.
exchanges.
Well, we offer spot, obviously, for people that can't touch it. But, the way it came out with the NDFs, and by the way, spot is more efficient way to do it, because if you want to trade something, the most efficient way is to trade the actual product rather than derivative. But if you can't touch the spot, so I said, listen, we can't touch it. And we start thinking about, well, what can we use? And drawing from our FX experience, we're very big FX and DF platform. We traded 1.2 billion of emerging market NDF, so try to trade a day 500 million of Korean won. It's you have to have a lot of clients. So we drove from that experience with the banks. We said, look, what if you just change the symbol from Korean won to Bitcoin? You can't touch Korean won, you can't touch the Bitcoin. So we'll give you NDFs, and that really resonated with them. They got very, very excited. I mean, I can't even count how many presentations I did to the bank. So a lot of banks created this, committees on crypto and presented, and this is how it kind of took off. And the next step for us is to go into options, to derivatives. Obviously, the equivalent of options of spot is they called NDO, non-deliverable options. So that's obvious the next step after the crypto NDFs. And then another exciting thing that we're doing is we filed with the Securities Exchange Commission Form 1 to create a national stock exchange that trades 24/7, 365. That's another problem. So right now, crypto trades 24/7, but nothing else does. So you can't even trade crypto ETF over the weekend, right? So basically what we're doing with the SEC filing is we're creating a stock exchange where, after New York Stock Exchange closes at 4 o'clock on Friday, the entire weekend, 1st of January, Christmas, you can come in and not only trade Microsoft, you can trade Bitcoin ETF, or you can trade Bitcoin ETF expressed in Korean won, or you can trade Microsoft and Ethereum. So that's the beauty of our system. That's 24/7, 365 and multi-asset, so it's always working. And you can express various assets in terms of other assets 24/7. It's regulated, it's very secure. Banks like it, they're already participants. So that's kind of what we're working on, adding more asset classes and combining all these asset classes into a single system to give to our clients 24/7, 365.
So traders never have the opportunity to sleep. That's what you're going for.
We're seeing similar things on the institutional side, specifically around regulated derivatives. We recently announced our acquisition of FairX, and in the regulated markets, you're going to see obviously regulated futures, regulated options, and similarly for those institutions that can't hold spot, they could trade, on a DCM.
Yeah, and actually a further point to that: are you seeing increased institutionalization of trader products? So obviously Coinbase kind of built its brand off of a lot of retail trading, which is all that existed back even 4 years ago. Obviously there's an enormous amount of hedge fund industry participants that have been involved in this space, increasingly more so. That's probably what you're seeing a lot on 24 Exchange. how should we think about liquidity in those markets? How do we, I mean, we as an organization trade a fair amount of options, and we'd love to see that market significantly deeper than it is today.
Yep.
How do we get to that point?
Yeah, no, we saw this again with U.S. listed options, right? Like, you have to find the retail order flow to bring in the market makers to really give you a nice deep liquidity in something like options where you have strikes all over the place. I think that specific to spot, like, people are still looking to find a good benchmark price to mark to market, and whether it's at the end of the week or the end of the month or the end of the day. Part of the reason why we're launching the BTC auction. So I think it's all about liquidity aggregation, and we're learning a lot of lessons from traditional markets, but also, writing new rules as we go.
Yep. Okay. All right. We've got a handful of minutes left here. I assume there are a fair amount of questions from the audience. Hopefully we keep the lights on for a few. So let's open it up to questions. I know that was the key thing I was supposed to say here for the guy with the microphone in the back. Who has questions for Dmitri or Vishal? Coinbase or 24 Exchange? Okay. About as far as it can get from you. Sorry. Just a moment. She'll make her way over.
Yeah, thanks. This might be outdated, but I mean, typically when we see that institutional investor can't trade an underlying product, it's because they're not registered at the destination regulations. But if it's at the source, if it's their own internal compliance, and they can't trade in the product, they typically can't trade in the NDF either, right?
No, that's not true. So the problem with so the NDF is dollar settled, and you trade with the counterparty. So let's say, J.P. Morgan Chase trades with Standard Chartered Bank, right? And they say, okay, so the price of NDF is X today, Y tomorrow, and it goes to Y, and you owe me so many dollars, and that's pretty much it. You can trade anything, that way. Now, when you trade the actual spot, you have to take a possession of that coin, right? So now, where that coin been? Where are you sending this coin, right? so that's kind of the questions. How do you safekeep it, right? So a lot of those questions popping up, and that's where kind of every bank's internal compliance is getting tied up. When they see NDF, and and this is something already they went through 1,000 times before. It's very familiar. It's dollar settled with the counterparty that they know. They have to have an ISDA. There's a ISDA, what's called ISDA agreement between the counterparties. It's a very standard agreement. So it goes much more standard channel, and it's looked at within big organizations as a much lighter lift than actual enabling the spot trading. It's AML storage. Counterparty in the counterparty risk.
The banks are historically late to the cryptocurrency game, and I think some of them are looking at ways to catch up as quickly as possible. And like products like these, in either an NDF or regulated derivative, are helpful to allow them to onboard. I will say that if you talk to institutions that would trade crypto but not trade in DeFi a year ago, they're like, oh, we don't touch DeFi. We don't look at DEXs. We don't know any of that stuff. Now you have them actively participating in DEXs to compete, and if they don't, then you're gonna have firms like BlockTower kind of like eat their lunch, and they're gonna compete in areas that a regular institution won't. So I think the bars are changing. The bars are getting lower in certain areas.
I agree with that, and I think what it is, if you have a big bank, the bank has to comply with so many more regulations than a startup firm or technology firm, that it just takes them so much more time and so much effort. They have global regulators, to committees, so it just takes longer. They do want to do it. They do want to offer the services. They working very, very hard doing it. And
if you're working at a bank and they won't let you trade crypto, there's plenty of places you can send your resume.
Quick HR plug for
I know everybody's hiring. I know you're hiring as well.
Yep. Yeah. We've got time for probably one more question from the audience. Any inquisitive folks out there? Anybody? I see you. You're about to go. Yeah? Okay. What do we got?
This question specifically for Coinbase, but it's sort of a stamp of approval in the market whenever something gets listed on your centralized exchange. So I'm curious, beyond the validity of a project, what environmental concerns do you take into account whenever you're determining whether to list an asset?
You're talking about in terms of ESG?
Yeah.
Yeah, I think that like holistically, the cryptocurrency economy needs to take a harder look at ESG when we look at every single project. In terms of our listing strategy, it's focused around what we can legally list. So we don't necessarily prioritize according to ESG at this point, but our goal is to offer liquidity in our order books for every asset that is legally possible. So that's our focus. We have different ways of prioritizing that.
That was a quick one. I'll give us one more.
We got two more.
Oh, we got two. Wow, look at this.
They're gonna shut the lights on us.
Last slot.
Hey guys.
Round is full.
I'll try to make this quick. How do you guys think about, so, the ethos of the industry is decentralization. The large exchanges tend to be centralized. What do you think the advantages to that are? Do you see that evolving into decentralization over time? Or do you think the status quo makes the most sense for where we are?
Yeah, I'd love to take that. So, I think it's hard to say someone like Coinbase isn't involved in decentralization when we're a large part of USDC. I mean, that was my job. And I think of something like USDC was a gateway to DeFi. Until you had a regulated dollar that you could really trust, that was ERC20, that you could actually leverage in DeFi, it was called open finance, and it didn't really work as well. I can tell you that if you read any of Brian's posts, DeFi is a huge part of what we do. And as I was talking about before, there's a lot of really interesting things that we have in the wings that I think that I'm super excited about. And I think it's on the tip of every tongue at Coinbase.
We can squeeze in one more here.
I have quick answers.
That was very, very punchy. I appreciate it. Excellent. 60 seconds, 1 minute warning.
Thanks for squeezing me in here. So on the ESG question, I didn't have one until you asked that. How much can we learn from how we've tried to move away from fossil fuels? One could argue that given where we are today, that maybe the move, especially by Europe, was too much too soon. From your seat, how much of the ESG concerns are valid, and how much can we learn from the transition we've been making from the fossil fuels to make a more, I guess, like a healthier transition?
Yeah, I'll give one quick point and then I'll hand off. So like right now we're in growth mode and we're hyper focused on just growing the crypto economy as quickly as possible. And then I think as we evolve and as we mature, we get to prioritize ESG more and more. And I think that there's real concerns around it, and we have to make sure that we prioritize our efforts accordingly. But right now we're gas pedal all the way down, trying to figure out how to grow the crypto economy beyond where we are today.
I mean, to me, it's in terms of ESG, 92% of Bitcoin is mined already. It's like 8% left. I mean, it's very small amount left. I don't think it's a big deal.
Yeah, I think capital markets will. I think cost of capital for ESG friendly, resource efficient miners, for example, would just be cheaper over time. Capital markets will take care of that.
And also how much it is to print the currency, to transport it. Like if you compare to the actual paper, right? So you have to print it, you have to transport it, how much does that take versus a computer, over wire, over internet.
All right. 50 seconds over. That's pretty good. Thank you, everybody. Thank you to the panelists.